Hello friends, I hope you are all doing good. Before we start today's discussion, let me wish you all a very happy new year. Let this year bring all the success which you want in your life. Let this year fill your life with happiness, with joy. We all know that 2020 was a bad year for most of us, most of the people around the world. Let us forget what is gone. Bad days are gone. New day has come. New year has come. Let us start this new year with full positivity, full energy, and let us achieve whatever we wanted to achieve in our life, and let us be happy with whatever we have. Now in this video we will be discussing upon the question paper analysis. We will be taking the question paper analysis of CA inter examination, CA IPCE new syllabus 2020 November 2020 examination. Whatever question paper was there, that question paper analysis we'll do. This question paper is downloaded from your ICI website, ici.org.in, from the intermediate syllabus. Okay, and also there is an announcement which I have to make with regard to the online classes. Now going forward, you all will also be able to get the online classes of say Dilip. I'll be taking online classes now. Before I used to make only this material available, but now apart from this chart material, I have also prepared my GST study material which will be available, and along with that also the courses will be available online. I hope you all enjoy it. Subscribe the channel for the latest update, and thank you very much for all your warm wishes and your responses for that Sanjeevani booty, for the chart material, for the section summary which I have prepared. I got a lot of responses from you all that it helped a lot during your examination. Thanks a lot for your support. Keep supporting me. Let us now start the discussion on Section B. Okay, we have two sections in your syllabus, taxation. Section A talks about direct taxes. Section B talks about indirect taxes, which consist of GST. Okay, so our discussion will be limited to GST portion only. So this paper is for 40 marks, but our discussion will not be for 40 marks, because we have 12 marks MCQ based questions, so that the questions are not shared by the institute. The MCQ questions are not shared by the institute, so we will be taking care of all the descriptive questions only. With this small introduction, let us start our discussion on this subject or this particular question paper. Okay, what is the first question telling? First question is telling K&K Limited, a registered supplier. Who is he? He is a registered supplier of Mumbai, is manufacturing heavy machine. Its outward supply exclusive of GST for the month of January 2020 has been given below. So he has made interstate supply made to another state of 85 lakhs, and he has made intrastate supply made within the state of Mumbai or within the state of Maharashtra of 15,000. Now the applicable CGST SGST rates is 9%, 9% and 18%. So IGST rate is 18% applicable. So in case of interstate supply, what are you going to charge IGST? In case of intrastate supply, what are you going to charge CGST SGST? So the details of inward supply, the taxes paid on inward supply for the month of January 2020 has also been given to us. Point number 1, he has purchased raw material. Of which 70% of the inputs were used, 30% was not used. Use is not the criteria for taking input tax credit. Usage is not the criteria. You should receive it. So raw material he has purchased. Then he has purchased raw material B, in which 90% of the material was received in the factory. Remaining, very important line, remaining material was completely damaged due to road accident on the way to factory. So when the vehicle which was carrying these goods, raw material B, when the vehicle was coming towards factory from whatever location it was coming, 10% of the goods was damaged. It was not due to anybody's negligence, but these goods were damaged. So can you take input tax credit on the 10%? Can you take input tax credit on the 10%? On the 10%, no ITC can be taken by you. Next, construction of pipeline laid outside the factory premises. Outside the factory premises, I want to discharge the factory waste. For that purpose I am constructing the pipelines. Can I take input tax credit? Answer is no, sir. Sir, construction of pipeline is construction of immobile property. Construction of immobile property, ITC cannot be taken, blocked under section 17 subsection 5. See, what is section 17 subsection 5 telling? If you are purchasing any goods or services for construction of immobile property, then you cannot take any input tax credit. If that immovable property is plant and machinery, then you can take ITC, then you can take input tax credit on that particular item. Now, construction of pipeline is nowhere plant and machinery. Pipeline is not plant and machinery, therefore you will not be able to take input tax credit on it. Then, insurance charges paid for trucks used for transportation of goods. Now see, with regard to motor vehicle, if the motor vehicle is used for transportation of goods, you can take input tax credit. So if you can take input tax credit at the time of purchase of motor vehicle which is used for the purpose of transportation of goods, then you can also take input tax credit on the repairs, on the servicing cost, on the insurance cost which you are incurring on that particular motor vehicle. So in this present case, the motor vehicle is used for the purpose of transportation of goods, therefore the insurance expenses incurred, you can take input tax credit. Can you take input tax credit? Yes, you can take input tax credit on this item. Then we'll before we solve this, we'll see the additional information also. Additional information says that there is no opening balance of input tax credit. Very good. There is no opening input tax credit balance. And point number 2 says details of GST paid on inward supplies are available in GSTR 2A except item number 1. What is it telling? The details of the purchases which is made, ITC with regard to all the purchases which is made is available for all the items except item number 1. What is that item number 1? Raw material A. What are they telling? For which the supplier has not filed the GSTR 1 for the month of January 2020, hence corresponding input tax credit is not reflecting in our 2A. So K&K Limited is the purchaser. Now there was an amendment made. As per this amendment, what is the provision telling? The amended provision is telling that the ITC, you can take input tax credit on the items which is not appearing in 2A, but it shall be restricted to 10%. Earlier for May attempt it was 20%, but for from November attempt onwards it is 10%. It is 10%. So what happens in GST? See, this is something which is discussed in my amendment videos. So if I am selling goods to someone, I will have to file GSTR 1. If I will file my GSTR 1, that data will be reflected in the recipient's portal in GSTR 2A. So here the recipient is K&K Limited. He has purchased raw material A. The supplier has not uploaded the return. He has not uploaded that invoice. Because he has not uploaded the invoice, the same is not reflecting. So if you see the input tax credit amounting to 60 plus 60, 120, 1,20,000 is not appearing on GSTR 2A. It is not appearing on GSTR 2A. So can you take input tax credit? You cannot take input tax credit of 1,20,000. You cannot take input tax credit of 1,20,000. Sir, but the provision says you can take 10% extra. No sir, yes. The provision, rule 36 sub rule 4. Rule 36 sub rule 4 is telling what? Rule 36 sub rule 4 is telling if there is an input tax credit which is not reflecting in your books in your GST portal, then you can take 10% of what is eligible and what is appearing in GSTR 2A. So here raw material B is appearing, and construction of pipeline is appearing, and insurance claims is appearing. These three credits are appearing. Am I eligible for taking input tax credit for all these three items? No sir. For which are the items for which I can take input tax credit? Sir, you can take input tax credit on item number 2, that is raw material, and item number 4, which is insurance claim. But item number 2 also I cannot take full input tax credit. How much input tax credit I can take? Sir, you can take 90% ITC. So 50,000 into 90% is how much? Sir, 45,000. Can I take ITC of 30,000 for construction of pipeline? No. Can I take ITC on this insurance charges? Yes. So 55,000 plus 45,000. So total ITC, total input tax credit which is available with you is 55,000 on insurance paid plus 45,000 on the raw material which is purchased, raw material B. So total ITC, eligible ITC. So I'll write total. Please note I'm little fast because we are doing an question paper analysis, so we should be fast. Total eligible input tax credit as appearing in 2A is 1 lakh. On this additional 10% as per rule 36 sub rule 4, I can take additionally 10% of whatever is already appearing, eligible input tax which is appearing. So I'll add 10% which is equal to 10,000 rupees. So total ITC for the month, total input tax credit which is available with you for set off is 1,10,000 rupees. This is the total input tax credit for the month of January 2020 which can be taken by you. So what is the first question which they have asked? Compute the eligible input tax credit available for the month of January 2020. So what is your answer? The available ITC is CGST equal to 1,10,000 and SGST equal to 1,10,000. This is the available input tax credits. Next point says net minimum GST payable in cash for the month of January after using the available input tax credit. So for that we'll have to see our output tax liability. What is your output tax liability? Sir, my output tax liability, yes, your output tax liability. What is your output tax liability? Sir, on interstate supply I have to pay IGST, correct? How much IGST you have to pay? Sir, 85 lakhs into 18%, sir. So 15 lakhs 30,000. Then on 15 lakhs which is an intrastate supply made within the state, how much GST you have to pay? Sir, 15 lakhs into 9%, sir. Into 9%. 1,35,000 CGST and 1 lakh CGST is equal to 1,35,000. SGST equal to 1,35,000. Please note, we are just analyzing the question paper. I am not actually solving the way we should solve in your examination. Okay, in your examination, if you answer like this, they will not give a marks. How should you answer in examination? First, write computation number 1. Say computation of tax on outward supply or output tax. Then point number B, computation of input tax credit. Then point number C, computation of net tax liability. Okay, these three separate workings you are supposed to give. So net tax liability is, what is my output tax? IGST, CGST, SGST. Output tax IGST is how much, sir? Sir, 15 lakhs 30,000. CGST is how much? 1,35,000. SGST is 1,35,000. Then available input tax credit. Do I have IGST credit? No, sir. Do I have CGST credit? Yes, sir. How much? 1,10,000. Do I have SGST credit? Yes, sir. How much? 1,10,000. Now subtract these amounts from the above tax liability. So net tax payable in cash is how much? Sir, 15,30,000 IGST I should pay in cash, 25,000 CGST I should pay in cash, and 25,000 SGST I have to pay in cash. I hope you have all understood this particular question. Sir, this is an 8 marks question. If I do this working, sir, how much marks will I get? If you compute your output tax liability, point number 1 you will get marks. 1 marks you will get for computation of output tax liability. Then 1 marks for computation of input tax liability, and 1 marks for computation of net tax liability payable in cash. Sir, then where are the other 5 marks, sir? Where is my 5 marks? 5 marks. Mark number 1. Now, question number 1, you will get 1 marks over here. you should write, what you should write, sir, you should give reference to rule number 36 sub rule 4. You should tell that because the data is not reflecting in GST at 2A, we cannot take the input tax rate of 60,000. Then what can you take? You can take whatever is eligible and available on the 10% extra I can take. So rule number 36 sub rule 4 you will have to mention. Then raw material B. Raw material B, again for this also you should write, give reference to section 17 subsection 5 block credit, which says what, if there is any goods which are damaged, which are given as free samples, etc., on that ITC will be blocked. You will not be able to take input tax credit on the same. Then again give a reference to section 17 subsection 5. Tell the ITC is blocked on this particular item, construction of pipeline, because construction of immovable property ITC cannot be taken. Then again give a reference to section 17 subsection 5. Tell that, give a reference to section 17 subsection 5. Tell that ITC is blocked if the insurance claims are for motor vehicle which is used for transportation of person. No block, ITC is not blocked for the motor vehicle which is used for transportation of goods. So here you will get 4 marks. Here you will get another 4 marks. And for this computation of CGST, SGST, writing that in case of interstate supply, CGST is liable to be paid. In case of intrastate supply, SGST and CGST, sorry, in case of interstate supply, IGST is liable to be paid. In case of intrastate supply, CGST and SGST is required to be paid. Sir, only this much, sir. And last 1 marks we will get for writing the manner of utilization of input tax credit. Manner of utilization of input tax credit. Sir, what is that? Section 49 subsection 5. Now I'll just show all this provision in the chart material once. So this question is with regard to payment. So input tax credit, if you see, there is rule number 36 sub rule 4 which I have written. The ITC eligibility is limited to 10% of eligible input tax credit, in respect of which details have been uploaded by the supplier. Then block credit, ITC on motor vehicle used for transportation of person is blocked, but ITC on motor vehicle used for transportation of goods is not blocked. Therefore you can take input tax credit. Then works contracts, goods or services used for construction of immovable property except plant and machinery is blocked. In this case pipeline is not a plant and machinery, so ITC is blocked. Then goods lost, stolen, destroyed, written off or disposed of as by way of gift or free samples, ITC is blocked. In the present case also, the goods which is lost or damaged because of evaporation or because of your negligence or not because of your negligence, it doesn't matter, ITC on the same will be blocked. You cannot take input tax credit. Then manner of utilization of input tax credit. Because we have to utilize the ITC available, you should also, because we are making the payment of taxes in cash, you should also write this manner of utilization. Just write this chart, you will get 1 marks for this. IGST is required to be utilized for IGST ... whatever banner is there, write this, you will get 1 more marks. Sir, should I write this completely? Writing this box is sufficient. Writing this box is sufficient. If there is a specific question on computation of tax liability only, write the entire provisions of section 49 subsection 5. So I hope you have understood this particular question. Question number 5, K&K limited question. Then question number 6, following are the particulars relating to one machine sold by SQM limited to ACD limited. So I'll refer them as S limited and A limited. In the month of February 2020, the list price of the machinery is 9,50,000. So I'll write point number 1. List price is how much, sir? So we'll do the computation over here only. List price is 9,50,000. Then, which is exclusive of discounts and taxes. Further, the following additional amounts have been charged by A limited. What are the different amounts? Municipal taxes charged on the machinery. There is a municipal tax which is charged on the machinery. Now I'll write add 15 to additions or inclusions as per section 15 subsection 2. Point number 1, what is it? Municipal taxes. Are municipal taxes required to be included in value of supply? Answer is yes, you should include municipal taxes while computation of value of supply. How much? 45,000. Then point number 2, outward freight charges contract was to deliver the machine at A Limited's factory. FOR contract. Who is the supplier over here? S Limited is the supplier. So S has to deliver the factory at A Limited's factory premises. The machine was supposed to be delivered at A Limited's factory premises. So this outward freight charges, should it be added in value of supply? Answer is yes. Transportation charges or freight charges, should you add? Yes, I should add 65,000 rupees. 1, 2, 3. Next point. Okay, additional information, other additional information. S Limited normally gives an interest-free credit period for 30 days for payment. After that, he charges 1% per month or part thereof on list price. After that, he charges penalty or late fee of or interest of 1% for non-payment of consideration within time limit. Now, is non-payment of consideration or late fee, interest, penalty charge for delayed payment of consideration required to be added in value of supply? Yes. But what have they given? They have given a beautiful note over here. What is this note? They are telling A Limited paid for supply after 45 days, but S Limited waived off the interest penalty. The interest payable was waived off. Who said? S Limited said, see, A Limited, you are supposed to pay me some interest, no? Please don't pay me that interest. Who said? S Limited, who is the supplier, said, I don't want interest. Now, because the supplier has told you he does not want the interest, so he will not receive the interest. Because the supplier has told he does not want interest, he will not receive the interest. If he is not receiving the interest, not required to be, it is not required to be added in value of supply. If you also see this, you can also refer to section 12 subsection 6, which talks about what? Interest, penalty, late fee for delayed payment of consideration. The time of supply for the same will be the date of receipt of the same. So you will have to pay tax on interest, penalty, late fee for delayed payment of consideration only at the time of receipt of that amount. If you don't receive that interest, penalty, late fee for delayed payment of consideration, will you pay tax on the same? No. Then S Limited received 50,000 as a subsidy. So I'll write that point also. Point number 3, interest dash. Point number 4. Point number 4 is what? Yes, Limited received 50,000 as a subsidy from one non-government NGO, non-government organization on sale of such machine. This subsidy, this subsidy which it has received was not linked to the price of machine and also was not considered in the list price. Meaning, see, whenever you receive the subsidy, what will you do? You will reduce it from value of supply. In the present case, because it is not linked to the price of invoice, are you supposed to reduce it from the value of supply? Because it is not linked to the price. See, only those subsidy which is linked to the price is required to be added in value of supply. So is this linked to the price? No sir, it is not linked to the price. So should you add it in your value of supply? Answer is no. Has he added it in value of supply? Answer is no. He has not considered the same. If he has not considered the same, he has done a very good job. He should have done the same thing. Point number 1, 4, subsidy. I should not do anything with regard to subsidy. Subsidy, please, I'll repeat again. If you receive any subsidy from any person other than government, central government or state government, and if it is linked to the price of the goods which you are selling, only then it is required to be added in value of supply. In the present case, it is not linked to the price. If it is not linked to the price, it is not required to be added in value of supply. Then A Limited deducted discount of 15,000 at the time of final payment, which is not, oh my god, what is this point showing which is not as per? They have deducted a discount of 15,000 rupees at the time of receiving the payment. A Limited from A Limited, S Limited told, hey Sundara, please pay me only, please pay me 15,000 less. I am giving you a discount of 15,000. Now, is this 15,000 required to be reduced from the value of supply? Answer is no. sorry, is this 15,000 required to be reduced from value of discount required to be reduced from value of supply? Answer is no. Section 15 subsection 3 says any discount which is given after making a supply should be reduced from value of supply if three conditions are satisfied. What are those three conditions? Condition number 1, it should be agreed between the supplier and recipient. Condition number 2, it should be linked to specific invoice. Condition number 3, ITC on the discount portion should also be subtracted. But in this case, condition number 1 is only not satisfied, therefore you will not reduce it from value of supply. So I will just do this total once. So total comes to what? 9,50,000 plus 45,000 plus 65,000, 10,60,000. From this 10,60,000, write less exclusions from as per section 15 subsection 3. What is that exclusion? Point number 1, discount. Is discount required to be excluded? Answer is no. So what is your taxable value? 10,60,000. Sir, there is one more point. Yeah. What is this last point telling? S Limited collected 9,500 TCS under the provisions of income tax law. Now, there was a circular issued by the department. That is CBIC board, telling that whatever TCS you are collecting, see section 15 subsection 1 clause A says all the taxes shall be added in value of supply. All the taxes which you are collecting shall be added in value of supply. Who is telling? Section 15 subsection 1. But however, there was a circular issued by the CBIC board of indirect taxes which said if that taxes which you are collecting, if the taxes which is collected by you is in the form of TCS under Income Tax Act, the same is not required to be added in value of supply. So will I add this 9,500 in my value of supply? Answer is no. So compute the total taxable value as per the provisions of GST law, considering the price is sole consideration and parties are unrelated person. So what will be your taxable value? The taxable value will be 1,60,000. Now we'll see all the provisions in our chart material once. Whatever we have discussed, just one single page, if you would have studied all this answer, all these questions you would have been able to answer. Section 15 subsection 1 says what? Value of supply is transaction value. Section 15 subsection 2 says was inclusions in value of supply. What are you required to include? All taxes except the taxes under GST if charged separately. Even GST is not required to be included. And also what? TCS which is collected under Income Tax Act also is not required to be included. Any payment made by the recipient which supplier had to incur, incidental expenses, interest, penalty, late fee for delayed payment of consideration, and subsidy which is directly linked to the price received from any person other than central government or state government. Discount, exclude. What can you exclude from value of supply? Discount can be excluded. Discount which is given after supply can be excluded only if three conditions are satisfied. Condition number 1, it should be agreed between the supplier and recipient, it should be linked to specific invoice, and ITC proportionate to that discount amount should be reversed. So what is your answer, sir? Answer is 1,10,000. Now the question is for 6 marks. When will I get the entire 6 marks? You will get 2 marks for your workings. Whatever answer you have found, 10,60,000, you will get 2 marks. You will get, how many adjustments are there? 1, 2, 3, 4, 5, 6. For these 6 adjustments, you will get 3 marks. Half marks for each and every adjustment if you write a note for this adjustment. Note number 1 should be section 15 subsection 2 clause A. If you know the clause, very good. If you know the section number, very good. Write that section number, section 15 subsection 2. As per section 15 subsection 2, municipal taxes charged on the machinery is required to be added. All the taxes other than that taxes under GST is required to be added in computation of value of supply. Then section 15 subsection 2 clause C says incidental expenses is required to be added in value of supply. So this outward freight charges is required to be added in value of supply. Who is telling? Section 15 subsection 2 clause C. Sir, is writing clause in examination important? No. If you have written section 15 subsection 2, very good. Then this interest, is it required to be added in value of supply and interest? Section 15 subsection 2, again write the provision. Section 15 subsection 2 says interest for delayed payment of consideration is required to be added. Also give a reference to section 12 subsection CX, which says interest is required to, you will have to pay tax on interest only if it is received. Then section 15 subsection 2 clause D talks about subsidy. Subsidy is required to be added only if it is what? Linked to the price. Only if it is directly linked to the price of the goods or services which you are supplying. Then finally TCS is not required to be added in value of supply. You can just write a single line as per section 15 subsection 2 clause A, all the taxes is required to be added. However, a circular has been passed by the CBIC telling that the TCS collected under income tax is not required to be added in value of supply. So what is your answer, sir? Final answer. The final answer is value of supply is, or the taxable value is 10,60,000. Then next question. Following independent cases, decide which person is liable to pay the taxes, if any. If there is any tax which is required to be paid, who is the person who has to pay the taxes? Tell me. You may assume that the recipient is located in taxable territory, ignore the aggregate turnover exemption, etc., etc. Now, Veer Transport, a registered GTA, Goods Transport Agency, paying GST at 12%, GTA paying taxes at 12%, transported goods by road of, my name, of what? They have transported Dilip and Company's goods, a sole proprietorship firm who is not other than specified persons, which is not registered under GST or under any other law. Which is not registered under GST or under any other law. Beautiful question, very beautiful question they have asked. Now, GTA, I am explaining the provisions with regard to GTA. Please see this beautiful provision they have told. GTA has two options. What option? Option to pay tax at 5% or option to pay tax at 12%. See, if I am telling 5%, that means 2.5% CGST, 2.5% SGST. If I say 12%, 6% CGST, 6% SGST. Now there is, GTA has two options. Option number 1 is to pay taxes at 5%. Option number 2 is to pay taxes at 12%. In that also, again 2 arrow marks. If the services are provided to 7 notified persons or 7 specified person, if a GTA is opting to pay tax at 5%, provide services to 7 notified person, then this 7 notified person has to pay the taxes under reverse charge mechanism. If the GTA provides services to others, such as individual, if a GTA provides services to other than the 7 notified person, individual, HUF, etc., if a GT opting to pay tax at 5% provides services to any person other than the 7 notified person, then it is exempt. It is exempt as per exemption provision. Then further, a GTA who is opting to pay tax at 12%, a GTA who is opting to pay tax at 12%, supplies services to 7 notified person. Who has to pay the taxes? The GTA has to pay the taxes under forward charge. This is liable to be taxed under forward charge. And who has to pay the taxes? So tax paid by 7 notified person. So here forward charge. So tax paid by 12%, tax is paid by GTA only. GTA only at the time when the GTA is giving the invoice, it will also have to collect the taxes. Then, sir, what if the GTA is supplying services to others? So what if the GTA is supplying services to others? In case GTA is supplying services to others, such as individual, HUF, etc., then it is exempt. Then it is exempt. This is the provision. Now what is the question telling? Veer is a registered person. It supplied services to Dilip and Company. Dilip and Company, a sole proprietorship firm. Other than this specified person, who is a sole proprietorship firm other than a specified person, which is not registered under GST. Now, one mistake most of you will make is you will consider the same under the second category and give an exemption. Exemption is available only if an individual is taking services who is an unregistered person. if the services are taken by a business entity. See, Dilip and company is a sole proprietorship concern. He is a person who is doing the business. Therefore, for him, no exemption is available. If no exemption is available, who should pay the taxes? The GTA has to pay the taxes to the government. Under forward charge, whatever invoice the GTA is going to issue, on that invoice, the GTA also will have to collect the taxes. The GTA also has to collect the taxes. See, reverse charge provision is applicable only for, we will see this point. See, reverse charge, GTA not paying tax at 6%, CGST 6% means IGST 12%, provide services to 7 notified person. So if a GTA is not opting to pay tax at 12%, then RCM provision is applicable. Now we'll see the provisions of exemption with regard to GTA. Services provided by GTA. So services provided by GTA by way of goods carriage to an unregistered person, including an unregistered casual taxable person other than the specified person. Okay, just a second. This will be exempt. In the present case, I'm changing my answer. Sorry. What is the answer, sir? The answer is no tax is liable to be paid. Why? It is exempt. It is exempt by way of notification number 12/2019. If a GTA is providing services by way of goods carriage to an unregistered person, including an unregistered casual taxable person, if the GTA is providing services to an unregistered person, it does not matter whether it is a business entity or non-business entity, it is always exempt. In the present case, they are telling that Dilip and company is a sole proprietorship concern not registered under GST. So who should pay the taxes? No tax payable. Why, sir? Because it is exempt. So what will you write? First, write the provisions of which is applicable to GTA. Write this provision. GTA 2 R marks 5%, 12 marks. Sir, if I write this chart, will they give marks? That 100% they'll give you marks. Write this chart and explain the provision. Also write this particular line. Wherever you have written this exemption, for this exemption, write a single line. What line should I write, sir? It is exempt as per notification number 12/2017. As per notification number 12/2017, this services is exempt from payment of taxes. So the answer is what? It is exempt from payment of taxes. Point number 2. Mr. Kamal Jain, an unregistered famous author. He is an unregistered famous author. He received 20 lakh rupees as a consideration from PQR Publications Limited for supply of services by way of temporary transfer of copyright covered under section 13 subsection 1 clause A of Copyright Act relating to original literary work. Who has to pay the taxes? Now, this is a question wherein there was a small amendment made in this particular section wherein the amendment which told that if an author is giving services by way of temporary transfer of original literary work, then in such cases that author will also have two options. The tax can be paid under forward charge or under reverse charge. If the author wants to pay the tax under forward charge, if the author wants to collect the taxes for whatever income he is earning, then author will have to be, first point number 1, he will have to be registered under GST, and point number 2, he will have to inform the publisher that he will collect the taxes under forward charge mechanism. Sir, what if author is not registered person? Then RCM is applicable. Sir, under RCM, who has to pay the taxes, sir? The PQR publishers or publication is required to pay the taxes. This point which they have given is with regard to the small amendment which is made under, which was recently made. As per that small amendment, what is the provision telling? If the services are provided by author by way of transfer of original literature related work, then the tax can be paid by the author. He has an option to pay tax under forward charge if he is getting registered and he informs the same to the publisher. If there is no such registration or there is no such information, then the publisher has to pay the taxes under reverse charge mechanism. Who is telling? Notification number 10/2000 notification number 10/2017 is telling that RCM provision. Section 9 13/2017. 13/2017 is telling, what is this point telling? Original literary works by author to a publisher. Note, author can choose to pay tax under forward charge also. So normally it is liable to be taxed under reverse charge mechanism, but author can choose to pay tax under forward charge also. When can he pay tax under forward charge? If he is registered, if he is registered person. These are RCM services under section 9 subsection 3. So in this case, who should pay the taxes? PQR publishers shall pay the taxes under reverse charge mechanism. Oh, so this both the questions were for 2 to 2 marks. Write the answer and give the provision. Question number 7A. BBD Private Limited of Gujarat exclusively manufactures and sells product Z, which is exempt from GST by notification issued under relevant GST legislation. So there is a company B Limited which is supplying a product Z. That product Z which is supplied by B Limited is exempt from payment of taxes. So it is completely exempt from GST. The company sells Z only within the state and is not registered under GST law. Why, sir, it is not registered? Because as per section 23, which talks about person not liable for registration, section 23 says, if you are a person who is supplying, if you are a person who is supplying exempt supply, who is making exempt supply, you don't have to take any registration under GST. If you are making only exempt supply, here they are telling he is exclusively making the supply of Z which is exempt from payment of tax. The turnover of the company in financial year, previous year 18-19 is 50 lakhs. It expects that sales to grow by 10% in 1920, that is next financial year. It is expecting that it will grow by 10%. So it is expected turnover will be 55 lakhs. So its expected turnover for next year is 55 lakhs. However, with effect free from 1st January 2020, last year 1st January 2020, exemption was available on Z, was withdrawn by the central government and GST at 5% was imposed. What is this point telling? This product which was exempted all this time, from 1st January 2020, the government told now the exemption is withdrawn and you will have to pay 5% tax on the same. Now when is the tax required to be paid? Will it be retrospectively applicable? No. Whenever an exemption provision is made applicable, it is prospectively applicable. So the turnover of the company for 9 months ended on 31st December 2019 was 42 lakhs. The company till now, till the time it is taxable, it has made a total supply of 42 lakhs. B Private Limited is of the opinion that it does not require to get registered under GST for the current financial year. Examine the above scenario and advise whether it needs to take registration or not. Now, it says it does not want to take registration. Why is it telling so? Because it may be referring, that company may be referring to the section 23 which says if you are providing exempt supply, you should not, you are not liable to take any registration. And maybe that company also feels, maybe what the company is feeling, I am talking from company's angle, I am not talking from your question, the examiner's angle, or what you are required to answer in the examination. The company is of the opinion that because it is taxable from 1st of January 2020, so my sales made from that date I will count for seeing whether I am required to take registration or not. Now, section 22 talks about person who is liable for registration. Section 22 says if your aggregate turnover in the preceding financial year of a person who is making taxable supplies crosses 20 lakh rupees, then he is required to take a registration under GST. Now till 31st December, see what is section 22 telling? Section 22 is telling if the aggregate turnover of person making taxable supplies crosses 20 lakh rupees, then he shall be liable for registration. If your aggregate turnover crosses 10 lakh rupees, 20 lakh rupees, you should take registration under GST. The limit is 10 lakh in case of 4 special category states. But this person is not in special category states. He is in the state of Gujarat. Therefore, for him the limit is 20 lakhs. Correct? Okay, sir. Now, what is the definition of aggregate turnover telling? Aggregate turnover means aggregate value, that is the total value of all taxable supplies made by you, all exempt supplies made by you, export of goods or services, and interstate supply to a person having same PAN. But it shall not include, the aggregate turnover shall not include the taxes under GST, that is CGST, SGST, IGST, etc. The taxes under GST, and inward supply liable for reverse charge. Now, in the present case, if you see his aggregate turnover is, see, you should take registration if your aggregate turnover crosses this limit in current financial year, not preceding financial year. In the financial year, if it crosses, his aggregate turnover is 42 lakhs as on 1st of January 2020, or as on 31st December 2019, his turnover is this. From this date, he is going to make a taxable supply. What is the provision telling? If you are making taxable supplies and your aggregate turnover crosses 20 lakh rupees, you should take registration. The provision section 22 does not tell that if you are making taxable supplies more than 20 lakhs. It says if your the provision says if your aggregate turnover crosses 20 lakhs. It does not say your aggregate turnover from taxable supplies. It says if your aggregate turnover crosses 20 lakh rupees in a financial year, and if you are making taxable supply, you should take a registration. So he will be making taxable supply from 1st of January 2020. Therefore, D Private Limited is liable for registration. Is it liable for registration? Yes. So the opinion of BBD is not correct. It is required to take the registration under GST. So this is what advice you have to give them. Registration provision, we'll just see once what is the provision telling. Section 22 subsection 1 says, supplier of goods or services or both shall obtain registration in the state or union territory from where he makes taxable supplies if his aggregate turnover exceeds 20 lakh rupees in a financial year. So at the time of calculating aggregate turnover, you should take the total supplies made in that financial year. Total supplies which is made in that financial year. Total supplies as on the date it is taxable is 42 lakhs. So is it required to take registration? Sir, but this turnover is from exempt supply. No, it does not matter. Aggregate turnover includes exempt supply also. So does it require to take registration? Yes, it is required to take registration. And also, see, you should give reference to this particular section plus section 23. What is section 23 telling? Person not liable for registration. Who is not liable for registration? Person exclusively making supplies which are exempt. If you are a person who is exclusively making the supplies which are exempt under GST, then you are not liable to take any registration under GST. So BBD Private Limited is required to take a registration under GST. Next, it is mandatory to furnish the details of conveyance in Part B of e-way bill. The comment on the validity of above statement with reference to the provisions of e-way bill. Now, e-way bill GST EWB 01. EWB 01 is the e-way bill form. It has two parts, Part A and Part B. Part A is the basic details with regard to where you are supplying, who is the supplier, what type of document it is, whether tax invoice, bill of supply, etc., delivery challan, what is the taxable value, HSN codes. That is all about Part A. Part B is with regard to transporter detail. Who is the transporter and what is the vehicle number? Now their question is that furnishing the details in Part B is mandatory. Is this correct? That is what their question is. So is this true that you should furnish the details of conveyance in Part B? The answer is normally yes. Please see what the words which is used by me. Normally yes, it is compulsory, or you are required to furnish the details of conveyance, or you are required to fill the details in part B of GST EWB 01. But however, there are scenarios wherein you don't have to fill. There are scenarios when it is not mandatory to fill. Who is telling? E-way bill provisions is telling. Where is that provision, sir? E-way bill provision. Okay. See, so this is a question for 3 marks. Very beautiful question. Your answer will be, normally it is normally the details of conveyance are required to be filled in part B of GST EWB 01. But however, in the following scenarios, the same is not required to be filled. The e-way bill shall be valid for movement of goods only when the information in part A is furnished. Part B is furnished. However, the details of the conveyance may not be furnished in part B of the e-way bill, where the goods are transported for a distance up to 50 km within the state or union territory from the place, from where? From the place of business of the consignor to the place of business of the transporter for transportation of the goods. If you are sending the goods up to the distance of 50 kilometers so that the goods can be delivered to the transporter, then not required. Or for or from the place of business of transporter to the final place of the consignee. If the goods are going from transporter's location to final consignee's location, then provided the limit should be 50 kilometers only, then e-way bill is not required. So if you write this provision, 3 marks you would have got. Then submission of, okay, in form GSTR1, submission of invoice wise details of goods outward supplies is mandatory for all kinds of invoices issued during the tax period. Comment on the validity of the same. So GSTR1 is what, sir? GSTR1 is your statement of outward supply. It is a return which you have to file for giving the list of all the outward supply which is made by you. Now this kind of outward supply can be, normally a registered person makes outward supply either within the state or outside the state. This supply can further be divided into two arrow marks, or 2 different cases. These types of supply, interstate and outward supply, the supply which is made by a registered person can be a B2B supply or B2C supplies, and intrastate also it can be B2B or B2C. B2B means what, sir? A registered person is making supply to another registered person. B2C means a registered person is making supply to an unregistered person. Now, as per the when you see this GSTR1, the form, only those details of invoices are required to be uploaded by you which is supplied by you to another registered person, meaning only B2B invoice details are required to be uploaded by you. If you are making B2C supplies, then 2 arrow marks. If you are making B2C supplies within the state, then you should give consolidated details, meaning what is the total supply made in your state, in that particular state, within the state, into what is the rate wise consolidated details you should give. But if you are making an B2C supplies interstate to another state, then check whether the invoice value is more than 2.5 lakhs or it is less than or equal to 2.5 lakhs. Check what, sir? Check the individual invoice value. Check the single or individual invoice value is more than 2.5 lakhs or less than or equal to 2.5 lakhs. If it is less than 2.5 lakhs, then give consolidated details. Give the consolidated details in your GSTR1. If it is more than 2.5 lakhs, then you should give invoice wise details. Please note, single invoice value is more than, if you have supplied to an unregistered person and that supply made to one unregistered person, that single invoice which is raised by you, that single invoice value is more than 2.5 lakhs, then only invoice wise details is required to be given for B2C supplies, or else it is just consolidated details which you have to upload. It is just the consolidated details which you have to upload. So is the statement which is made by them correct? Answer is no. Invoice wise details are required to be given only for B2B supplies, only for B2B supplies. In case of B2C supplies, normally consolidated details are uploaded, state wise and rate wise consolidated details are uploaded. However, if there is an interstate B2B supply whose value is more than 2.5 lakhs, then invoice wise details are required to be uploaded for that particular invoice. Then, who can impose the restriction on input tax credit available in electronic credit ledger? Under what circumstances the restriction can be imposed under CGST rules? This is an amendment which was recently made. This is a question purely on amendment. Purely on amendment. Recently they had made an amendment and told that the commissioner has the power to restrict your input tax credit. He can restrict whatever ITC is there. He can restrict if you have not filed the returns, or if the supplier has not filed the returns, if you don't have the documentary proof, etc., if you are not following the conditions, etc., he has the power to restrict. We'll come to this point. We'll see that amendment material which is there, and we'll see this answer to this particular point. Now, explain the order of discharge of tax and other dues as per the provisions of section 49 subsection 8 of CGST Act. How should you discharge the tax and other dues? How is it required to be discharged? The order of discharge is, first you should discharge the liability, that is tax and other dues of previous periods, then the tax and other dues of current period, then whatever is left over you should use for discharging the liability of the notices issued under section 73 or section 74. Who is telling? Payment of tax chapter is telling. Okay, payment of tax chapter. What is the order of discharging of tax liability? The taxable person shall discharge the liability in following order only: self-assessed tax and other dues relating to the previous tax period. Previous month's returns you should file first. Then self-assessed tax and other dues relating to current tax period. Current month return you should file. Then any other amount payable under this act or rules made thereunder, including the demand under section 73 or section 74. This is the manner of discharging the tax liability, tax and other dues. So this was a question for 5 marks. Wow, what a beautiful simple question for 5 marks. Okay, last question. With reference to CGST Act, discuss in brief when import of services is required to be considered as supply and when it is not considered as supply. Beautiful chart diagram we make in our classes when we discuss this particular point, and very simple question actually. It is from your topic number 1, supply, section 7. Section 7 says what? See, section 7 subsection 1 clause B says importation of services for a consideration in the course of business. Whether it is in the course of business or not in the course of business, it does not matter. If there is an importation of services for consideration, then it is always taxable as per section 7 subsection 1 clause B. However, importation of services without consideration will also be taxable if the import of services is a person from his related person outside India or from his any other establishment outside India, if it is made in the course and furtherance of business. If it is made in the course and furtherance of business. I will write the chart diagram which we normally write in our classrooms with regard to importation of services. So importation of services, 2 arrow marks. You are importing, please note, I am writing in short format, okay, so that we can complete it soon. Importation of services, 2 arrow mark. It is imported with consideration. It is imported without consideration. With consideration and without consideration. If it is imported with consideration, again 2 arrow marks. Check whether it is imported for business purpose or for non-business purpose. Check whether it is in the course or furtherance of business or it is not in the course or furtherance of business. Here also same 2 arrow marks. It is for business purpose, for non-business purpose. If services are imported with consideration for business purpose, again 2 arrow mark in all the cases. Again 2 arrow marks. Check whether it is imported from a related person or non-related person. Check whether it is imported from related person or non-related person. Check whether it is imported from a related person or non-related person in all the cases. Related person. If you are importing services with consideration, now let us come to the conclusion. If you are importing services with consideration for business purpose from a related person, is it taxable? Yes, it is taxable. If you are importing services with consideration for business purpose from a non-related person, is it taxable? Yes, it is taxable. Importing with consideration for non-business purpose from relative, taxable, and from non-relative also it is taxable. In case number 1, what case number 1? If services are imported for consideration, always taxable. It is always taxable. It is taxable under section 7 subsection 1 clause B. It is taxable under section 7 subsection 1 clause B. When is it taxable? If it is imported with consideration. But however, if it is imported without consideration, then the answer varies. How does it vary? If imported services without consideration for business purpose from a related person, yes, taxable. From a non-related person, not taxable. If it is for non-business purpose from a related person, not taxable. And if it is from non-related person, non-business purpose, not taxable. In these cases it is not taxable. Meaning what? If you are importing services without consideration and that importation is for your business purpose from your related person, then it is taxable. And under which section it is taxable? Section 7 subsection 1 clause C, read with schedule 1. Read with schedule 1. It is taxable under section 7 subsection 1 clause C, read with schedule 1. If you would have written this particular chart, you would have got your marks. Now let us connect to the internet and see that amended material. I will just check whether it is there in this device. I don't think it should be there here. Okay, I'll just log in and I'll go to the YouTube page. Just a second. So amendment, okay, this is the amendment lecture, Google Drive, what it is, open online. So the question, question which was that who can restrict the ITC, that question we are seeing now. Who has the power to restrict the input tax credit? I hope you have enjoyed learning this particular amendment lecture, question paper analysis. Very soon you will get a news with regard to the new channel, with regard to online classes, with regard to the new material which is which I have prepared, etc. New material, from which date will this new material be made available to the students? If you want this amended material, you can download it from the channel. Input tax credit, okay. Now this was the question which was asked by them. Restriction on utilization of input tax credit, new rule 86A. A new rule 86A has been inserted in CGST rule to empower the commissioner or an officer not below the rank of assistant commissioner authorized by him to impose restriction on utilization of available input tax credit in the electronic credit ledger if he has a reason to believe that the ITC has been fraudulently availed or is ineligible. The restriction can be imposed in the following circumstances. When can he impose the restriction? ITC has been availed on the basis of the tax invoice or valid documents issued by a non-existent supplier. The ITC which you are taking is based on the invoice which is issued by a supplier who is not there at all, or by conducting issued by a non-existent supplier, or by a person not conducting any business from registered place of business, or without receipt of actual goods and services you are taking input tax credit, or the tax in relation to which has not been paid to the government. If you have taken input tax credit but the supplier has not paid the taxes to the government, then also they can restrict. Then the registered person availing the input tax credit has been found non-existent or is not conducting business from the registered place, or the registered person who is availing the input tax credit is not in the possession of tax invoice or valid document, then the restriction can be imposed by the commissioner or any person authorized by him. If the input tax credit so availed, the restriction can be imposed by not allowing such input tax credit to be used for discharging any liability under section 49, or not allowing for refund of any unutilized input tax credit. Such restriction can be imposed up to a period of 1 year from the date of imposing such restriction. However, the commissioner can withdraw such restriction if he is satisfied that the imposing conditions are no more existing. So this is the answer which you are supposed to write. So this is all about your question paper analysis. I hope you have understood all the questions, etc. Let us meet very soon in our next video. Till then, tada, bye bye, take care. A very happy new year to you all. Enjoy your life, okay?